Boys, what's going on? We have the ECB out. The ECB monetary out right now. There's been no change whatsoever in the current what do you call it nowadays? The current uh, interest rate. Excuse me, you can just find ECB. There we go. So I'm just gonna find their press release, monetary policy decision. Let's go. High inflation is major challenge for all of us. In May, inflation rose significantly, mainly because of surging energy and food prices and blah blah blah. Inflation, energy is projected to be above 3% in 2022, 2.10 in 2023, 2.3 in 2024 is above the March projection. They are then increasing their outlook. The market reaction is, everyone can hear me. The market reaction is, well, anything up and down. So just make sure that you do know that trading risky is trading is risky, by the way. Just gonna mention that to everyone so everyone knows that. Scroll and add a banner and show. I have not personally bought anything on Mr. Euro Dollar before at this event, but we're gonna go through that anytime soon. Harold is sending me fun stuff, so that is that. Aussie dollar is falling. Even New Zealand has a no, that was Euro. Yeah, has a spike there. Euro yen is coming back, a bit of a pullback there, but nonetheless. The new projections foresees an annual inflation of 6.8 in 2022, projected to be at 3.5. And the other thing that's also mentioned so far is that inflation has challenges always. Yeah, we already saw that, mate. That's a bit late. And so what is this? So the inflation forecast has been projected higher, which is kind of in depth with what we are kind of expecting them to do. Hello, Samsung. The other thing we also need to look into is what are going to do about the asset purchase program. They are ending as of 1st of July, which was expected. Okay. As concerns of the PEP concern reinvest the principal payments maturing securities at least until end of 2024. In any case, future role of the PEP portfolio bill managed to avoid interference will be appropriate to policy stance. Okay. The interest rate is accordingly in line with the government council policy sequencing. The government council intends to raise the key ECB raised by 25 basis points in its July. Wow. They actually said they're going to do it in July. Wow. Yes. The reason for that, mister, is the market was pricing in at 50 basis points in July. So here my phone is blowing up with the central bank. The European Central Bank is mentioning interest rate for the first time since 2011. 11 years. So yeah, Joe, if you want to come on, that's totally up to you. But oh yeah. And then we are going to go through the ECB statement. No, the ECB press conference in a couple of 40. I think it's supposed to be in 38 minutes now. Hello. What else? What else are they going to do today? Today I'm gonna post another video in a couple of 8 minutes. That was the original plan, but I didn't know I was supposed to be live now. So I guess it is going to be what it is, right? So Let's see if I can do something about that. How to invite. So we're gonna go through. Just gonna do something very quick. Oh, it says there. Okay, cool. Invite, copy to clipboard. Okay. And I can send it to Jojo. Oops, that was wrong. Oops. Nah, you're not there. Come on. And then where's Jojo? There was Jojo. Oh. So there we are, guys. People, fantastic. Hello, Rafael. Hello, Plato. Hello. So, looking ahead, the Governing Council expecting to raise interest rate again in September. That is less than what the market was expecting. The market was expecting this one to be every meeting beyond September. In the current assessment, the Governing Council anticipates a gradual but sustained path of rate increases to become above the 2 medium, above the 2 medium target. So 2% medium target. So what is the things today that I see so far? I'm also going to go to financial news to see what they say, just to make sure that we all have the whole things the same together. I was going to say, the outlook is broadly reflected on European staff projections, which foresees the GDP at 2.8 in 2022, 2.1 in 2023, 2.1 in 2024. Data dependence, gradualism, and flexibility. APP and PEPP has decided to end it by 1st of July, as mentioned. Concerns over the purchase program. ECB tends to invest in principal payments for maturing securities purchased under the program. Okay. The net purchases could also resume, if necessary, to counterattack any negative shocks related to the pandemic. Okay, fair enough. And in line with ECB policy, intends to raise interest rates in July, which was expected, but too little. Looking further ahead, ECB to raise again in September, again too little. Beyond September, current assets is anticipated. Okay, so I'm just saying the same things twice. Nothing else than that. What do you mean by accordingly in line with the government council policy change? Okay, so he's just so the euro drops are fake according to Mr. Abbas. I would also like him to comment to explain. But yeah, so currently we are having a whip show up and down, left and right at the moment. Euro New Zealand is actually one of the winners today. Winner, chicken dinner. Also having a weak New Zealand coming in today. So, should we buy the bottom? Tja, I don't know, maybe. There is Joe. Hope you're ready, Joe. Are you there? Testing 1, 2, 3.
Well, I bought the $0.
You bought it, yeah. I was too scared.
You can hear me?
But yeah, perfectly.
Can you hear me?
Yeah, I can. But if you turn off the stream, that will probably be better.
I can't hear you, I think.
Okay. That is weird.
Oh, we need to get into a call here.
What do you mean, mate? Okay. So you can't hear me now during the call. Okay, cool. Fair enough.
There we go.
So you can hear me now?
Now you should be able to hear me?
Hear you twice. Yeah. I am actually just going to, I don't know, take off Discord so I don't hear Discord twice. I think that's what I'm going to do. More than anything else. Where's Discord? Discord's there. So, can you still hear me? Because I'm not broadcasting.
I can hear you now perfectly. Everything's working.
Good.
No more technical problems. All righty.
Not again. Not again. Yeah. Okay. So, what is your first reaction to ECB? By the way.
I wasn't even reading it. I just had Financial Juice open, and I saw euro dollar dropped to 107, and I was like, "Oh, cool! I wanted to buy there anyway." So,
yeah,
I'm sitting at 27 pips right now on it. Nice.
Yeah, it's actually pretty cool. I just needed to. Well, I rate it as the mark. Well, as them being less aggressive than expected. That's why we had that drop. But yeah. So you bought just before, or as is the news came out.
Oh no, when it came out. Now, one thing is, I can tell you that from the outlooks I've been reading, the expectations were the ECB was going to hike rates in July, right?
Yeah.
However, the debate was 25 or 50. And it was pretty split in both directions quite evenly.
Mm-hmm.
So the fact that now we know it's 25 basis points for July, that's going to lead to some more discussions on clearly, okay, what kind of projection are we expecting euro to go in the future? Because now we have less guessing to do. So the outlooks that are going to be coming out literally today are going to be quite interesting. Actually, it just over the outlooks over the next 2 days, today and tomorrow are going to be really important to read because there's going to be a lot of updated forecasts. That's for sure.
Yeah, so we are expecting at least ING to say something today. Probably also Westpac bet at least, and then Danske Bank as well, coming up with a.
Oh yeah.
Coming up with a like. So if you don't understand anything of what we said today, or anything else, there is going to be explanations by other banks, so you can hear it twice, 3 times, 4 times, in relations to how to interpret this event.
How to make interpretations, right?
English isn't my first language, bro. You know that.
Well, let me be the prissy prancy who goes ahead and corrects your grammar.
Yeah. What did you get in English? I hope you got like better than me though.
Dude, it's my native. It's all I ever speak. So I don't speak any other languages.
So you didn't get a grade in English? You don't have English speaking?
No, I took
subjects
English,
in school,
right? No, yeah, of course I did.
Yeah, okay. I'm like wondering like how weird is America when you don't have your own subject in your own language?
No, everyone has English. Yeah, everyone has English.
Yeah. Because they dropped out of having a subject about Abraham Lincoln and George Washington or stuff like that. So I guess you guys have to learn something. Also, I don't know. That was
Man, let's look at some dollar pairs. These dollar pairs have been kind of juicy because I've been buying the at least on New Zealand, I've been buying the L1.
You've been buying New Zealand dollar?
Oh, that's the M2. M2 L1. You know I have a different
yeah, I know you are
midpoint layout for the pivots.
Yeah, I know you have a bit of a weird setup over there, yeah. So you've been buying M2 daily?
That's right, daily.
Basically. Yeah. Okay.
And we've just been, just sitting on it right now. But as time has gone on, I've been keeping the stops kind of aggressive here at these immediate lows.
Yeah. If you do want to share a screen, though, I haven't seen you have shared your screen, so you can also share your screen if you want to show your screen, though. That's all. Are you still?
No, I got a white. My screen is on light mode, so I don't want to blind the audience.
Okay. Now you can do white mode, so it will be more like flashing in people's faces more than anything else. By the way, people, I just saw that. Oh, I forgot to do that anyways. But I just published Well, automatically, I just published a video on the back end here about when I forgot to forgot to end the stream yesterday.
Oh man.
Just having well, no, is it supposed to be live now? I'm just gonna double check that. Actually, it's supposed to be, but I suppose I actually want to publish it in an hour, but I was too late. Oh, it's scheduled.
Sharon says, "Are you still holding on?" I don't know if he's asking about me or you. Were you trading Aussie?
Yeah, I was trading Aussie. I bought Aussie. Yeah.
I was
who asked?
short it like beginning of this week, and then I only took it down to like for like 50 pips.
Yeah, if this one
Aussie
breaks,
dollar's been kind of choppy from kind of beginning of this week, last week.
Yeah. Now, also for me though, I hold that. I see it as a bottom. As you know, if that breaks, I'm out of it. More than anything else. So by the way, people were just waiting for the ECB press conference in 25 minutes. That's all. So we're going through pairs. So if you have anything to request about questions, that's all you please ask. So I bought the open. I think I bought 72 level around there ish, give or take. So 30, 28, 20 pips in loss, I think, on it. So yeah, nothing too crazy at the moment. Nothing too crazy. But yeah, so you have New Zealand dollar buy, even though I would have sold it technically. No, but okay. And you bought euro, which is doing fairly.
No, I'm doing day trades today, by the way. These are I'm not holding these trades for a particularly long conviction time, just so you know. Yeah. Buying New Zealand dollar today and buying euro dollar today were your take profits are going to be 30, 40 pips away. And your stop loss is 10, 15 pips away. So, that's the day trade stuff.
Nah, I try to get a higher high on Aussie because of the hopefully the expected Aussie rate hike cycle to continue.
I'd stay short Aussie into next month, into July, because Westpac came out with a forecast saying, "Hey, we are probably going to get into the 70 cent range on Aussie dollar." And a little while after they posted that, the same day, I went ahead and I did my analysis and I said, looking at the probabilities and all that stuff, I think we're gonna, it was on the monthly pivot. So let me refresh real quick. I said, we'll probably go a little lower than that. Maybe like, we'll probably hit like 71, the 71 range, more likely. And then they updated their forecast to say, hey, we'll probably get to like 70.50.
Yeah, Westpac forecasted price.
I got it in my chat, and I can just send you the text here.
70.5 range.
Yeah, they were first targeting 71.70, and then they refined it to 70.50, 71.
Okay.
And I can get you the message link here. I'll send it over here on Discord. So you just click on that and it takes you right to the message.
Yeah. Where are you there?
And then there's also something there on New Zealand. New Zealand dollar, Westpac's New Zealand dollar forecast. And this is just from June 7th. So this is only 2-day forecast.
Yep.
Yeah.
Yeah. I just want to move on to another Aussie yen, as Mr. Singh mentioned. What is your thought here? I know what I think here, but what do you think here?
I think
how high are you?
Oh my god! I think I should have rode this out for longer. You know,
Well, last time we talked, you shorted New Zealand yen, by the way.
oh yeah, no, I got stopped out on that, but that, overall on this move,
Yeah.
I've made more money on this move than I've lost. It was just at
Yeah.
that bread doji. I was like, okay, I'm gonna take a shot here. And then the next
This one.
day came around and it went up, up, up for 3 days. And then I'm like,
Yeah.
thank
Okay.
God the stop loss was, 30, 40 pips and not
Yeah.
150. I had some conviction about shorting there.
Yeah.
I'm like, okay, at this point I'd be wrong. And then it went up, up, up.
Mm.
And at this point, I'm like, I'm still kind of inclined to short it, but not right now, just kind of due to
Yeah.
the seasonality.
Yeah.
The most bullish trading day by expected value terms
Yeah.
is Monday.
Yeah.
Which is in 2 trading days. So once today closes and the first, the opening day next week closes, we're going to get the most bullish by expected value trading day. And if I were to short Aussie yen, it would be in 2 trading days from now.
Yeah.
Because
Thursday, Friday,
after
Monday.
Yeah, on Monday. And once Monday comes around, guess what? And on Thursday, that is I believe, second most bearish trading day, or the third most bearish trading day by expected value for the month. So you typically, with seasonality, you want to short the days that have a high chance of being bullish days, so then you can go into the cycle of the days that are likely to be bearish, and then go long the days that are likely to be bearish, so that then you can take profit in the days that are likely to be bullish. So I'd wait. I got a plan. And my pivot probability system is saying, most likely your high is also in this area between, R1 and M4. I'm getting a probability weighted pivot price of 95, 94 on Aussie yen. So we're like sitting right on where I would start to just hold off maybe 1 or 2 more days and then figure out a trading plan from there.
Yeah. So what are we talking about here is generally Aussie yen tends to peak pretty hard around now.
Yeah.
It's iceberg. Now that is seasonality that's happened before around now these dates. Of course, it doesn't project anything that is actually going to happen. So don't
It is
break the
historical
banks
data.
on it. But it's historical data doesn't need to happen this year. But if it does,
However,
don't
we
be,
are also we are. I know some quants will yell at me when I say this, but we are quote unquote extended. We have had a lot of very, very strong positive momentum, and we are extended based off of a lot of historical measures. So you're going to start to see a lot of people hedging any more upside risk occurring just based off the historical odds we got. So
the problem being at the peak, as we saw here, is that once everyone starts taking profit, everyone starts taking profit. So if cascading is happening, it's going to be pretty bad if you are in a buy position. I know that you, Mr. James, you took profit at the monthly target the other day. Just going to double check where that monthly target is. That was down there. So right now on pound yen, since you mentioned it, just to jump on the same clue train here, is that we have paused. Now, what do you call it, Mr. FOMO is probably going to speak to you and say, "Hey, it's going higher," but don't believe it.
I'd say Aussie. I'd say pound yen is the better shorting opportunity. It's on a historical measurement basis, seasonally, it's more bearish towards the end of the month, and based off of pivot probabilities, how extended this could be seasonally based off pivot points, it is a lot more extended than Aussie yen, so relatively pound yen doesn't come to these levels in the month of June too often.
So what I want to say here from a New Zealand yen trade, I still have a buy on, by the way, and still have some profits on it. We are looking into the last hooray now. If we make a higher high now, I don't think that is actually going to be. I think what I believe right now, since I see this low, I'm not scared about it. I'm still okay, but I see this happening for some reason. It's just psychological. What if we just tick, and then
I
we just
did take a day trade long New Zealand yen.
Today?
Yeah, it's just day trade right long. However, I think I gave notice that I'm pretty much only doing day trades for like this week and into the beginning of next week. Pretty exclusively right now because we're in a spot where things could reverse very quickly. If you want to look at a monthly chart real quick for New Zealand yen, I got a cool stat for you.
I was just
27%. Yeah, New Zealand yen on a monthly pivot for 27% of your highs historically for the month of June come in between R1 and M4. A quarter of your highs come in right now.
Yeah. So it's kind of like, well, this is kind of what you should expect. And then if you get more now, you're like, wait a minute. The other problem here that I see for my buy is, well, I've held it since 85.30, but is that my seasonality starts going against me, momentum is starting to drop, we are starting to range. We haven't made a reversal at this point. We just have made a low. So day trading.
You can stay really positive New Zealand yen, by the way. The seasonality for New Zealand yen on a day-to-day basis is still very, very, very positive.
Okay. I just see it's tipping over though. But yeah.
Well, it's not. It's of the pairs we've looked at so far, New Zealand yen probably has as far as expected value goes. New Zealand yen still has very positive expected value for the entire rest of the month. It's flashing green on my screen for expected value seasonality for the rest of the month, except for one day.
Yeah,
the last day of the month is like bright red.
The only thing that I want to ask you though, I know I have my own theories there, but how would you trade July? What is your thoughts now? We're coming now into past the FOMC on Wednesday next week. It's kind of for me,
July
it's the end of the season.
It's going to be a breeze. It's going to be a lot easier to trade now because we have a lot more certainty about what to do in July, right?
Yeah,
we're not guessing. We have forward guidance, and so we're gonna figure out in June. I mean, we're probably going to be getting some violent action in the last 1 to 2 weeks of June as people position for whatever trend gets set up in July. And whatever trend comes in through July is going to be kind of conducive to your longer term expectations. So if July is up, then for that asset or that market, the expectation probably for the entire second half of the year is probably going to be up, and then vice versa.
So do you see that July could be the starting point or the springboard table? Springboard.
Yeah, it's going to set the mood for the rest of the year. July. Yeah, July will set the mood for the rest of the, at least for some assets. Some assets, they're going to continue appreciating or depreciating and then reverse as they get into the third quarter. So it's important to stay up to date with your outlooks and your macros.
Yeah. How important is macros in trading? Like, how much should we actually be following this?
It's good for trade planning, and it's especially good for identifying trade ideas. What market should you be trading? You should be trading the market that you know possibly the most about, most optimally. If you know a lot about what you're trading, you're going to have more confidence in being able to do day trades and then do swing trades on a weekly and a monthly basis very frequently, and then trade more assets in that market. So if you're really, really confident about your analysis on central bank policy and you do that on 3 or 4 central banks, you're going to have a really good idea of how those central banks are viewing the economy, and then what kind of policy they will enact based off of whatever economic outcomes come along. So when a new jobs report comes down the wire, when you read it, you'll know, based off of your expert analysis, how to interpret the central bank will respond, and from that infer a direction for your trade, right? So
yeah,
that's one way of looking at, macro for FX. Macro for stocks and macro for commodities are different monsters.
yeah. Would you trade gold?
I'd rather trade stuff like corn and lumber and oil.
Lumberjack.
Yeah, man, lumber's fun.
Is it? I haven't tried that actually. I haven't traded lumber. How do you trade it? Do you go to lumber? Do you go to the local lumber yard and buy some wood?
No, what are the it's LBS, I think. Yeah, that's
Okay.
the ticker, LBS.
Oh, okay.
Random Length Lumber Futures. And you can just see commodity trends throughout it. It's easy pickings. Commodities can be very easy pickings.
Oh, it's pretty good downtrend there, mate.
Yeah, it's been pretty easy decision making.
Harold, don't buy this if you're wondering. Go with the trend. Don't concentrate on this one. Harold says, nice to see Abbas and Joe Boss and the gang. We're going to be blessed. Have a great community. Thank you, guys. Yeah, actually.
Yeah, I bet you really have made a wonderful place for people to come and learn how to trade.
Thank you very much. No, don't make me cry. Yeah, buying coffee. Yeah. By the way, people, buying coffee is a good day.
Ooh, yeah.
That's a lot of that's a lot of sugar in there, mate. If GJ is making a low, can that be a signal for our downtrend?
You asking
me? Yeah, well, Shubran asked. I can answer myself if I want to.
Yeah, dude, you take a shot at it.
Well, how I look at it, mate, is this is number 1. And this is number 2. For anyone to understand what on earth am I talking about, that is the first pullback that I see as a potential reversal. I have tried to sell that before, and pound yen tends to peak a bit higher. So if I want to sell, I always want to have a double, 2 lower lows on pound yen to make sure that even it's if it goes up and make a higher high and then start doing that, it can do all crazy things. So I'm just going to be okay. I identify this is a reverse. This is coming up to resistance, but I've sold so many times that I am so burned. I want a new low.
If I had the bet, I'd go with plan 1.
Okay.
And you know why?
Risk reward ratio?
No, 40.91. 40.9% of your highs next week for the last 22 years occurred between the M3 and the R1 pivot. And the price for those pivots right now is 168.28 and 170.07. So, pretty decent chance, if you probably just sweep the high. I wouldn't expect this going any higher than 172, but a run from here to 172 is,
still
talking 500 pips. You're talking 500 pips there. next week.
Yeah, it's still 100 pips up to the high though. So there's a lot of potential losses before we actually bend lower.
No, man,
But okay.
I'd say the thing probably hits 170 and then, either it hits
Yeah,
169
another high
for a nice number or
just, you know what I think? Oh, he's gonna do a stop hunt and then he's gonna go lower again just to take our money.
No, man, there's a pretty big range you could top out in pound yen next week.
Yeah.
I mean, the volatility from this week has expanded your pivot points so widely that you really just got to know what you're doing.
Yeah.
On the day-to-day basis and not risk more money than you can afford to lose. I mean, yeah, seriously. There's still a lot of people who will be like, oh, I got $2,000 to start trading. Let me go ahead and open a position that's where, that's like $1 a pip.
Yeah.
Right. And that's totally wrong because I think that trade on a $2,000 account is $200 or $250. Yep. So that's like more than 10% of your account on one trade.
Yeah. But also pound yen moves like a beast. It's also the Widowmaker. But if you want to do pound yen, you have to have lower lot sizes on that compared to other assets. One for the pip value, second one for the volatility, and third of all, it has a unique property to stop hunt, as many people calls it. It has way higher waves before it starts to fall versus other pairs that would just do normal reversal. This might even come up and peak a bit more before you even can get a downtrend on it. And also, even though you feel like, well, all the yen pairs should fall, pound yen isn't always the first one to fall. It might even peak a bit higher before it follows the other ones like Aussie yen and New Zealand yen. I'm just going to cover gold for 2.5 seconds. Who said gold? What do you see in gold down to 1822? First and second and foremost, mate, is the range. I think that is more than anything else. I was hoping for more risk off a move on gold, that people were like, well, we don't want to have any risk over the summer. Let's jump into gold and take it higher. That didn't happen as of how much. Well, it did happen last week for some small there, but other than that, if it didn't get lifted off that ground of 1844 back down to the same level again, for me, that's just a, what do you call it? That's range. A failed trade. More than anything else, for me, say what? What do you think?
Yeah, it's just ranging, right?
Yeah. So it still hasn't broken 1844. It's still a range. It's all this range that I've already done. So if you want to trade it, it's totally up to you. But you're not gonna get any direction from me because the market is not giving us any direction. It failed 1860. That's actually very well, it's not dangerous, mate. But I think you were too closed in on gold, too micro. Because if you get moves like that, for example, or even this one, where
euro dollar,
1860 is very small in the big time frame. Yes,
euro dollar, check it out.
Oh, yeah, because you got profits now.
I'm getting all my take profits hit like right now on euro dollar. Oh my god.
Let me do something.
Look
here.
at this monster.
What did you buy?
I bought euro dollar at like a little above
107.
107. Yeah, 107. Yeah.
107 flat.
Yeah, and I just took it up for 50 pips. Now the damn thing 60. Could go higher because I don't know if you have this symmetric triangle on your chart or not.
No, I don't have
that. This and
symmetric triangle. You want to do patterns again, mate?
No, I was just looking at it and I'm like, huh. It's, in all seriousness, the only reason why I have chart patterns on my screen is just for context. I don't, I like to see, okay, we have a series of lower highs. Oh, we have a series of higher lows. It's another way of just visually reminding yourself of the whole up, down, up, down, or up, down, down thing.
Yeah.
So then you don't lose just track of trend.
Just gonna.
So I don't know if you can see the lines on my chart, but you should be able to see what I'm talking
you have
about
to share
there.
your screen, Mike. More than anything else.
All right.
If I'm supposed to do anything like that.
Share screen. All right, you got that?
I can see it, yeah.
Whee! Yep, there you go.
Okay. That was a bit more information than I thought, but okay, fair enough. So you bought 107 flat, that's around M2 there. That came around there, yeah.
And I just bought it right. Well, I had some orders here. I knew the volatility was coming in. I had orders to go long here, and then I put a stop down here. And I was like, okay, nice.
Your pound is moving, I guess, higher too, Mike.
Which one, dollar or
euro pound? But yeah, I guess that's
there you go.
Favorite
all the
of
euros are
Mr.
going to
Harold.
probably be moving like look at all these euros. They're moving up, up. And then here are all the Aussies down, New Zealand down, down. And the pounds are kind of split. And then the major dollar pairs actually are kind of down. Dollar yen is struggling, or rather yuan, dollar yuan. It's worth keeping an eye on this because as China comes back online, this is going to kind of be a gauge, right? Because this is China closing down their economy, and this is it coming back online if it comes down. So we can hide that. So watching this come down is confirmation of risk on.
Yeah.
Yeah. And then you got all the commodities here and whatnot.
Sorry, my bad.
Is ECB starting?
Yeah, I'm just waiting for them to get their things together. They're supposed to start now, so that's all. But I'm just waiting for them, so you can just. Well, the only question is if I share my screen now. If that makes you echo, that's the only thing. But I'll just make sure that we. I'm looking at the.
The comments. Because you're viewing it twice.
No, I'm viewing that, but I'll have you on Discord. That's all.
Well, I could mute myself in StreamYard, and you can keep me unmuted in Discord.
No, then they can't hear you.
Oh, all right. Well then, crap.
No, okay. Mute yourself on StreamYard, and then I will put you up on Discord. No, this is the first time I've tried out, but I don't know why you can't hear me though. That's kind of the more technical difficulties. Pristine Jen says, "What kind of indicators are you using?" Yeah. We have Madame Lagarde ready.
Let's listen in.
A warm welcome to all of you. Good afternoon. Today and also yesterday, the Netherlands Bank had the honor of hosting the ECB's Governing Council here in Amsterdam. It was the first time in 20 years that the Governing Council came to the Netherlands again. Today is also the first time that the ECB hosts this press conference again in physical format, and I hope it will add to the joy. Thank you. Over to you, Wolfgang.
Thank you very much, Governor Knot. We are also joined here on stage by President Lagarde and by Vice President de Guindos. This is a hybrid meeting, and for those who join us remotely, I would like to ask you, as always, to turn your camera and your microphones if you ask questions. I will now give the floor to President Lagarde. President Lagarde, please.
Thank you very much, Wolfgang, and thank you so much, Klaus. It's a real pleasure being here in Amsterdam, but we'll come to that later. Let me first wish you all in the room a good afternoon as well. The Vice President and myself welcome you to our press conference. I would like to thank President Knot for his kind hospitality and express our special gratitude to his staff and for the excellent organization of today's meeting of the Governing Council. High inflation is a major challenge for all of us. The Governing Council will make sure that inflation returns to our 2% target over the medium term. In May, inflation again rose significantly, mainly because of surging energy and food prices, including due to the impact of the war. But inflation pressures have broadened and intensified, with prices for many goods and services increasingly strongly. Eurosystem staff have revised their baseline inflation projections up significantly. These projections indicate that inflation will remain undesirably elevated for some time. However, moderating energy costs, the easing of supply disruptions related to the pandemic, and the normalization of monetary policy are expected to lead to a decline in inflation. The new staff projections foresee annual inflation at 6.8% in 22, before it is projected to decline to 3.5% in 23 and 2.1% in 24, higher than in the March projections. This means that headline inflation at the end of the projection horizon is projected to be slightly above our target. Inflation, excluding energy and food, is projected to average 3.3% in 22, 2.8% in 23, and 2.3% in 24, also above the March projections. Russia's unjustified aggression towards Ukraine continues to weigh on the economy in Europe and beyond. It is disrupting trade, is leading to shortages of materials, and is contributing to high energy and commodity prices. These factors will continue to weigh on confidence and dampen growth, especially in the near term. However, the conditions are in place for the economy to continue to grow on account of the ongoing reopening of the economy, a strong labor market, fiscal support, and savings built up during the pandemic. Once current headwinds abate, economic activity is expected to pick up again. This outlook is broadly reflected in the Eurosystem staff projections, which foresee annual real GDP growth at 2.8% in 22, 2.1% in 23, and 2.1% in 24. Compared with the March projections, the outlook has been revised down significantly for 22 and 23, while for 24 it has been revised up. On the basis of our updated assessment, we decided to take further steps in normalizing our monetary policy. Throughout this process, the Governing Council will maintain optionality, data dependence, gradualism, and flexibility in the conduct of monetary policy. First, we decided to end net asset purchases under our asset purchase program as of July 1st, 2022. The Governing Council intends to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date when it starts raising the key ECB interest rates, and in any case, for as long as necessary, to maintain ample liquidity conditions and an appropriate monetary policy stance. Second, we undertook a careful review of the conditions which, according to our forward guidance, should be satisfied before we start raising the key ECB interest rates. As a result of this assessment, the Governing Council concluded that those conditions have been satisfied. Accordingly, and in line with our policy sequencing, we intend to raise the key ECB interest rates by 25 basis points at our July monetary policy meeting. Looking further ahead, we expect to raise the key ECB interest rates again in September. The calibration of this rate increase will depend on the updated medium-term inflation outlook. If the medium-term inflation outlook persists or deteriorates, a larger increment will be appropriate at our September meeting. Third, beyond September, based on our current assessment, we anticipate that a gradual but sustained path of further increases in interest rates will be appropriate. In line with our commitment to our 2% medium-term target, the pace at which we adjust our monetary policy will depend on the incoming data and how we assess inflation to develop in the medium term. Within the Governing Council's mandate, under stressed conditions, flexibility will remain an element of monetary policy whenever threats to monetary policy transmission jeopardize the attainment of price stability. The decisions taken today are set out in full in a press release available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Looking at the economic activity, in the near term, we expect activity to be dampened by high energy costs, the deterioration in the terms of trade, greater uncertainty, and the adverse impact of high inflation on disposable income. The war in Ukraine and renewed pandemic restrictions in China have made supply bottlenecks worse again. As a result, firms face higher costs and disruptions in their supply chains, and the outlook for future output has deteriorated. However, there are also factors supporting economic activity, and these are expected to strengthen over the months to come. The reopening of those sectors most affected by the pandemic and a strong labor market with more people in jobs will continue to support incomes and consumption. In addition, savings accumulated during the pandemic are a buffer. Fiscal policy is helping to cushion the impact of the war. Targeted and temporary budgetary measures protect those people bearing the brunt of higher energy prices while limiting the risk of adding to inflationary pressures. The swift implementation of the investment and structural reform plans under the Next Generation EU programme, the Fit for 55 package, and the Repower EU plan would also help the euro area economy to grow faster in a sustainable manner and become more resilient to global shocks. Looking at inflation now. Inflation rose further to 8.1% in May. Although governments have intervened and have helped slow energy inflation, energy prices stand 39.2% above their levels 1 year ago. Market-based indicators suggest that global energy prices will stay high in the near term, but will then moderate to some extent. Food prices rose 7.5% in May, in part reflecting the importance of Ukraine and Russia among the main global producers of agricultural goods. Prices have also gone up strongly because of renewed supply bottlenecks and because of recovering domestic demand, especially in the services sector, as our economy reopens. Price rises are becoming more widespread across sectors. Accordingly, measures of underlying inflation have been rising further. The labour market continues to improve, with unemployment remaining at its historical low of 6.8% in April. Job vacancies across many sectors show that there is robust demand for labour. Wage growth, including in forward-looking indicators, has started to pick up. Over time, the strengthening of the economy and some catch-up effects should support faster growth in wages. While most measures of longer-term inflation expectations derived from financial markets and from expert surveys stand at around 2%, initial signs of above-target revisions in those measures warrant close monitoring. Let's turn to the risk assessment. Risks relating to the pandemic have declined, but the war continues to be a significant downside risk to growth. In particular, a major risk could be a further disruption in the energy supply to the euro area, as reflected in the downside scenario included in the staff projections. Furthermore, if the war were to escalate, economic sentiment could worsen, supply-side constraints could increase, and energy and food costs could remain persistently higher than expected. The risks surrounding inflation are primarily on the upside. The risks to the medium-term inflation outlook include a durable worsening of the production capacity of our economy, persistently high energy and food prices, inflation expectations rising above our target, and higher than anticipated wage rises. However, if demand were to weaken over the medium term, it would lower pressures on prices. Let's have a look now at the financial and the monetary conditions. Market interest rates have increased in response to the changing outlook for inflation and monetary policy. With benchmark interest rates rising, bank funding costs have increased, and this has fed into higher bank lending rates, in particular for households. Nevertheless, lending to firms picked up in March, and this was because of the continued need to finance investment and working capital against the backdrop of increasing production costs, persisting supply bottlenecks, and lower reliance on market funding. Lending to households also increased, reflecting continued robust demand for mortgages. In line with our monetary policy strategy, the Governing Council has undertaken its biannual in-depth assessment of the interrelation between monetary policy and financial stability. The environment for financial stability has worsened since our last review in December 21, especially over the short term. In particular, lower growth and increasing cost pressures, as well as rising risk-free rates and sovereign bond yields, could lead to a further deterioration in the financing conditions faced by borrowers. At the same time, tighter financing conditions could reduce some existing financial stability vulnerabilities over the medium term. Banks, which started the year with solid capital positions and improving asset quality, are now facing greater credit risk. We will watch these factors closely. In any case, macroprudential policy remains the first line of defense in preserving financial stability and addressing medium-term vulnerabilities. So, summing up, Russia's unjustified aggression towards Ukraine is severely affecting the euro area economy, and the outlook is still surrounded by high uncertainty. But the conditions are in place for the economy to continue to grow and to recover further over the medium term. Inflation is undesirably high and is expected to remain above our target for some time. We will make sure that inflation returns to our 2% target over the medium term. Accordingly, we decided to take further steps in normalizing our monetary policies. The calibration of our policies will remain data-dependent and reflect our evolving assessment of the outlook. We stand ready to adjust all of our instruments within our mandate, incorporating flexibility if warranted, to ensure that inflation stabilizes at our 2% target over the medium term. We are now ready to take your questions. Thank you.
Thank you, President Lagarde. And the first question goes to Caroline Look of...
My question.
Please.
Good afternoon, President Lagarde. I have two questions. Firstly, one argument that you've made rather frequently over the last few months is that the euro area economy is in a very different place than other advanced economies. And even so, 3 months after the Fed started raising interest rates, you are now looking to start doing the same. So is this still about a difference, or are we talking more about a delay at this point? And second of all, could you tell us a little bit about whether this week's discussion focused at all on fragmentation risks and whether there were any new proposals made to address them? Thanks.
Thank you very much. The Governing Council, on the occasion of this meeting organized outside of Frankfurt in beautiful Amsterdam, thanks to the National Central Bank of the Netherlands, focused primarily on the challenge of high inflation facing the euro area and on taking further steps in our normalization path that we started, I remind you, back in December. So it's not a question of catching up. It's a question of using all the tools that we have in order to deliver on our mandate of price stability and in order to bring inflation down to target over the medium term. And our analysis was obviously that inflation was, as we said, undesirably high, and that we had to take the steps that I have identified in the monetary policy statement. And I would like to add that it's not just a step, it's a journey. We started back in December. We gradually, over the course of time, put ourselves in a position to move away from unconventional monetary policy, which will actually be taking place as of the 1st of July, in order to use more conventional tools, which are the interest rates. And on the issue of the interest rates, we also identified a path, which is not only limited to a particular move, but a series of moves over the course of the next few months, depending on the medium-term outlook of inflation. On the second issue, we have to have the right monetary policy stance. That is critically important, and that is what we are doing with that identification of the journey that I just mentioned. But we also have to make sure that our monetary policy is transmitted throughout the entire euro area. And to that end, obviously, we need to make sure that there is no fragmentation that would prevent the adequate monetary policy transmission throughout the entire region. We have existing instruments. I think that we have described them in the past. It is obviously the reinvestment capacity that we have under the PEP, which is, I remind you, a complete reinvestment package that totals 1.7 trillion euros that will be reinvested with total flexibility if warranted across time, across jurisdictions, across products. And if it is necessary, as we have amply demonstrated in the past, we will deploy either existing adjusted instruments or new instruments that will be made available. But we are committed to proper transmission of our monetary policy, and as a result, fragmentation will indeed be avoided to the extent that it would impair that transmission.
Thank you, President. The next question goes to Mark Boinderman of NRC Handelsblatt over here.
Thank you, President Lagarde. My first question is whether today's decision was unanimous. Could you give us a flavor of the discussion? And secondly, the ECB is now communicating that in September it could raise rates by more than a quarter of a percentage point. Did you consider already giving that message for the July meeting? Thank you.
Well, thank you very much for your question. And as I said, we had very productive discussions in Amsterdam, and these discussions concluded with a unanimously approved decision. And as I said, we are on a journey, but this is clearly an important step in that journey, given that we are actually deciding to end net asset purchases under the APP as of the 1st of July, which effectively means that we stopped before for all sorts of market operation conditions. But we are also setting a path in which July and then September are the next first steps along the way of hiking interest rates. And while we intend to raise interest rates by 25 basis points in July on the basis of the assessment that we conducted today, we also indicate that, and I will read very carefully for you because it was obviously a sentence that we drafted carefully in order to capture our commitment. We also indicated that I'll read you the whole paragraph actually because it's a really important one. So we undertook a careful review of the conditions, which according to our forward guidance, you all remember the forward guidance with the three conditions, should be satisfied before we start raising the key ECB interest rates. Well, we concluded that these three conditions were satisfied. And accordingly, in line with our policy sequencing, for those of you who wonder why we didn't do it today, well, we have a sequencing in place that dictates, and we want to be predictable on that front, that we first of all stop net asset purchases and then we look at interest rate hikes. So in accordance with our policy sequencing, we intend to raise the key ECB interest rates by 25 basis points at our July monetary policy meeting. And That's the September that you were asking me about. Looking further ahead, we expect to raise the key ECB interest rates again in September. The calibration of this rate increase will depend on the updated medium-term inflation outlook. If the medium-term inflation outlook persists or deteriorates, a larger increment will be appropriate at our September meeting. That is pretty precise as a commitment, but it is also a factor of how the situation evolves. So if the medium-term outlook persists as we see it now, or even deteriorates, which of course we don't wish, but it could happen, then obviously the increment will be higher than 25. And then we go further because we take a third step along that journey to indicate what we will do beyond September, which is also the anticipation that further rates hikes will be necessary on the basis of the data that we collect. Thank you.
Thank you, President Lagarde. And the next question goes to Bart Meyers of Reuters. Bart, please. Here. You get a microphone. Yeah.
Thank you, Bart Meijer for Reuters. So just to make that perfectly clear, follow up on your last answer, does that mean that if the inflation outlook is not cut back down to 2%, that we will see a 50 basis point increase in September? And secondly, on the fragmentation. No, I'm sorry, I lost that question. What I wanted to ask.
Take your time, you will find it.
Yes, no, that's all right. You said that you wanted to increase the rates by September. Does that mean all 3 rates? Thank you.
Yeah, that's a good question. I don't want to give a reading exercise because some of you occasionally comment on the fact that I read too much, but this one I really want to read it a bit because it matters and every word matters, including plural versus singular, to your point. So what we say is, looking further ahead, so today we say that, we expect to raise the key ECB interest rates, the 3 of them, again in September, most likely. The calibration of this rate increase will depend on the updated medium-term inflation outlook. And here's the important one. If the medium-term inflation outlook persists or deteriorates, a larger increment will be appropriate at our September meeting. So I think that you took the example of if you are at 2.1% in 2024 or beyond, then the increment adjustment will be higher. The answer is yes.
Thank you, President Lagarde. And the next question goes to Annette Weisbach of CNBC. Annette, please, here in the middle.
President Lagarde, thank you very much for taking my question. I have one on what are you expecting in terms of time lag? If you raise rates in July, when will you see an effect on inflation and inflation expectations? And will that ultimately also mean that you have to lift rates to a neutral rate? And that would be my second question, because I think there's a lot of guessing around what you think the neutral rate actually is. Is it 1.5? Is it 2% for the euro area? Perhaps you could give us a bit more of an insight. Thank you.
So do we expect that our July interest rate hikes will have an immediate effect on inflation? The answer to that is no. And I would like to develop that a little bit. First of all, because of the anticipation of our monetary policy, because of the inflation and growth outlook, financing costs have already moderately but significantly increased, whether you look at corporate bonds, whether you look at sovereign bonds, whether you look at bank, of course. Those financing costs have increased. And with the signal that we're giving here, particularly concerning the short-term rates, this signal will continue to have an impact on financing costs. Now, typically monetary policy decisions have a longer term impact in relation to inflation itself. So we have to stay the course, be determined, committed to delivering the 2%. But we cannot expect that to happen on the 22nd of August for a decision that, sorry, 22nd of July for a decision that we would have made in July. On the other hand, because you mentioned inflation expectations, we observe that inflation expectations are well anchored. And we certainly want to indicate to those who form expectations, whether they're markets, whether they are experts, whether they're consumers, that we are determined to delivering on our target of 2% in the medium term. And therefore, expectations should absolutely remain anchored because we will deliver. Oh, the neutral rate. This is a topic that we have deliberately decided not to have on the occasion of this Governing Council meeting. And I'm sure that we will ad nauseum argue as to whether it is 0.96 or 1.97 or beyond or below, or whatever. Suffice to say that the neutral rate over the course of time, for multiple reasons having to do with productivity, with demographics and all the rest of it, has gone down. But where it stands exactly, we have decided not to discuss it on this Governing Council meeting. And believe me, we had plenty to discuss. So we saved a little bit for later. And, you know, to be fair as well, it's not something that you can observe and determine with precision today. Is as you get closer, we will understand better where exactly it stands, and we will debate it. I have no illusion on that. Thank you.
Thank you. And the next question goes to Dan Balacher of Volkskrant. Dan, please.
Good afternoon. Thank you for taking my question. Is the end of the asset purchasing program a good time for you maybe to adjust the forward guiding policy? Because when it was introduced in 2013, it was meant to manage market expectations. But now it seems like the ECB would have stopped the purchases earlier, if not for the promises made, even though there was an extraordinary inflation-inducing event like the war in Ukraine. Is the tail, financial markets, not wagging the dog, the ECB, instead of the other way around? My second question is related to this one. The ECB believes inflation will fall down back to target by 2024. But for most of the past decade, the ECB also consistently thought that the inflation rate, which was then too low, of course, would converge to its target, and that also didn't happen. So how firm are your beliefs that you are going to succeed now, as historical experiences do not imply great credibility?
First of all, on the issue of forward guidance, I'm assuming that you're referring to the forward guidance relating to asset purchases. Yeah. So if you look at that forward guidance, we have actually changed it. If you recall, the forward guidance that we had referred to favorable financing conditions and to accommodative, there was a qualifier as well, but it referred to the accommodative aspect of our monetary policy. We have changed that. And if you look at the third paragraph on the second page, we do refer to the fact that we will do so for as long as necessary to maintain ample, not favorable, ample liquidity conditions and an appropriate monetary policy stance. So we take account of the change that has indeed taken place. And you're right, we are in a different universe. A lot of the tools, the forward guidance, the considerations over the last 11 years had to do with exactly the opposite movement, trying to bring inflation up because it was too low and often at risk of deflation. Now we are in the opposite situation, where inflation is too high and we need to bring it back to our target of 2% over the medium term. Now, how confident are we about our projections? First of all, I'd like to say that our staff does the best work they can do and apply their whole consciousness and professionalism to producing those projections. Second, those projections are not just the ECB. The projections that you have in front of you are the projections of the entire Euro system. So it's the ECB and 19 national central banks, including the Great Bank of the Netherlands, which has actively and always actively participates in this exercise. So it's a cohesive work that is done, that is tedious, that is iterative, and that really checks everything. Third, it is clear that the massive energy prices hike and the war in Ukraine and the fast pace of the recovery have taken all forecasters by surprise. You know, I thought you would ask me a question like that. So what did I do? I looked at other, I hope I can find it now. Anyway, it doesn't really matter if I don't find it. The point being that all international institutions, all forecasters of repute have actually made the same mistake of underestimating or not anticipating some of the developments, such as the war, such as the energy crisis. Fourth point, I think we, the Euro system and the ECB in particular, we are the only central bank which has gone back to the work that was done, which has looked under every stone to understand where the errors came from. And I use the word errors with some trepidation because it's misforecasting caused by very unpredictable events. 3/4 of the forecasting errors is actually attributable to energy prices, and the rest is largely attributable to bottlenecks that have lasted longer than had been anticipated. So again, they do everything they can as well as they can. They make the same kind of forecast as other international institutions. Events that have developed are not captured in either models or sometimes just the sheer imagination of us all when we talk about the war at the doorstep of Europe. And fourth, we do the introspective exercise of trying to find out where it went wrong, and we will continue doing so in the future because we have to improve, no question.
Thank you. And the next question goes to Mark Schreurs of Börsenzeitung. Mark, please.
Yes, thanks for taking my questions. The first one is on reinvestments. In the past, you've stressed several times the importance of the stock of assets compared to the flow. Now you have reaffirmed to reinvest, especially the PEP payments, principal payments, at least until the end of 2024.
I'm gonna end it there, people. I'm too hungry to listen to these people, and whatever happens to them. So what I'm going to do now, I am going to I'm going to publish a video, like, let's say right now. I think it's called save and publish. Public, share, publish. It is from the stream yesterday. I think there's a fun little 2.5 minutes you guys can go and watch. I'm going to give you the links. I am going to end my buy on New Zealand yen now. I'm going to end my okay, no. I'm going to do 2 minutes of analysis and then I'm going to go because I'm too hungry. Sorry. So, first of all, second of all, third of all, fifth of all. So what do they say? Well, they have updated their growth forecast, leading to higher prices on the euro. Right now, I believe that the reason for why euro falls is for the single reason that we are seeing less rate hikes than previously forecasted. That is what I feel. Now, I am not the holy grail, but number one, they have updated their forecast significantly higher. They have, I think, they downgraded the GDP forecast, to be honest, as far as I understood them. they are concerned about the war. They are concerned about bottlenecks. They are concerned about prices going too high. Therefore, they're going to increase their interest rate in July, lower than expected. They're also going to have one increase in September that is less than expected. We were expecting another one. Is it like in August or something? Like at least for every meeting for the rest of the year. They are also going to end the PEPP that I have seen. Joe is back, by the way. So let's go see. You have to add your microphone there. Can't unmute because you have muted yourself. Okay, cool. Whatever. So the last thing that I want to add there is, or one of the many things, is that labor markets are strong, and that they need to reduce their pedal on the foot more than anything else. So I don't know, what is your update, Joe, on your euro dollar trade? Did you take profit, or are you back to break even?
I already had to take profit set, and
you have to unmute on stream, by the way, mate.
Oh.
And I am going to mute you on Discord. So I can
all right. Everything cool?
Okay, cool. Yeah, I think it's better now.
Yeah, no, I already got out of it on that spike up to 0.750.
0.750. Okay.
Yeah, that's where I got out. I mean, the way I set up this trade is I just put in my limits, and I got filled on my limits. So it was pretty straight. I mean, I pre-planned the trade all the way through with my entry, my stop, and my take profit. So it was completely automatic for me. I didn't have to look at the chart or anything.
That's the power of planning, mates. I took away the that you made was currently in, because you never told me that you exited. I didn't see anything. So, well, yeah, actually, you did tell that you did hit your profits at that point. So good. Any other remarks you want to give on ECB?
The whole point of this ECB meeting was to give clear forward guidance for markets on what monetary policy in Europe will be. And because of that, we're going to become more certain of what trading decisions we ought to make.
Yeah.
So if you don't understand the implications of this ECB meeting, you need to listen to Ivan more, and you need to be doing more research. I mean, if you don't know what any of this stuff means, let's say you read the ECB post and you still don't understand what it means, it means you got more stuff to learn. You have to go to do more basic stuff than what you're already attempting to do. So, because there's a lot of guys who'll try to get into trading and listen to our streams, and they're like, I don't understand what like really basic words in this space mean. Words clarification is really, really important. And sometimes it's good to double check, do I really know what this word means? And just doing a simple Google search, clarifying what the words actually mean, what they specifically mean. Because the words that central banks use are very carefully crafted and very selectively chosen. So much so that they know if they choose or include any particular words, it'll send AI algorithms to go totally haywire. So all those central bank statements have very selective wording, and they generally have an aim as to what direction they're going to send the market. So you got to, so I'm not going to, explain here kind of what those words are and go down a whole freaking list.
Rabbit hole.
But it's not, but it's not the hardest thing in the world to figure out. I mean, the big one, but the Federal Reserve was the whole transitory thing.
That wasn't transitory.
Yeah. And so, but that was failed forward guidance. And the word transitory had the reverse impact that the central bank thought it was going to have.
Yeah.
So some words have the opposite impact on the market as they're defined to supposed to have.
Yeah.
It can get confusing if you don't know what you're doing, what
Yeah.
the underlying meaning of the words and the context behind those words are.
Yeah.
So, that's why you got to read your macros.
Yeah. The market straight up disagreed with Fed. In this case of Euro, at the moment, I feel like the market's a bit ahead of themselves in terms of pricing in what is actually coming out of ECB. I read them today as they are less hawkish than the market is. So there has to be a
Yeah.
repricing, which
Yeah,
I've
you're
been trying to
right.
say to people today.
You're absolutely correct. That's probably the biggest takeaway for someone who's in the know. That's probably the biggest takeaway, that ECB is actually less hawkish than people originally anticipated. And we're going to see all the forecasts come out now from that repricing over the next 2 days.
Yeah. So one thing else, people, just make sure that you are that you guys are up to date on those, so that you don't. Well, it's not nothing to miss out on. You just have to, don't miss it. Like, it's not like any second it will come and everything will crash, But you have to generally have read it in the end.
Mm-hmm.
What is our outlook on Euro Aussie? For me, I actually believe this one. Well, I don't have too many thoughts about Euro Aussie in general, but I think that it should probably, well, in my opinion, go lower. But I know you have a totally opposite view on that one because you believe Euro is strong, or that you believe Aussie is weak or should be weak. But I believe that there's going to be more inflation than currently priced in. But that's me. That's my little forward guidance. Yeah. Any comments there?
Euro
If we
Aussie?
can buy Euro Aussie, is that something you would consider?
Man, Euro Aussie would be a tough buy. I mean, look, historically, the thing doesn't usually top out here for the month. I mean, you're probably. I mean, my best guess is you're getting your high around M3 H1, which is 151 for the month. Yeah, that'd be my best guess, and that even is maybe pushing it because we're probably going to get some Euro weakness through the rest of the end of this month. Let me check it's pretty darn choppy. And I wouldn't expect Euro Aussie to be particularly strong, especially over at least the first half of the next trading week. Euro Aussie gets really volatile during the first trading week. And then it gets really volatile again towards the end of next week. Like its two most bullish and bearish days by expected value are next week. It's back to back. So Euro Aussie gonna get choppy next week, man.
Yeah.
So I be careful.
That would be the historical data. What generally would expect out of a Euro Aussie at this point of year, generally speaking.
Yeah, at this point right now, I wouldn't. I don't know if the thing's gonna go too much higher.
Euro yen by Mr. Chris. The thing is, Mike, you have reached a weekly target. You have hit the monthly target. You are allowed to request for a top here. You are seeing fresh low, though I find it aggressive. I find it a bit too early. I would say that would probably be a better deal. That is my deal. But I don't know, Joe. How is is Euro yen still going to be moving higher statistically?
Yeah, I'll tell you right. Well, before I preface this, I have to use the H level pivots because I've totally forgot what pivot M level is above R2.
Yeah, you are a weird person sometimes, mate.
What pivot is that? M5? M6?
I can actually put on, which one is it? Is it everything?
Yeah, it's the L's and the H's. I mean, I'm looking at H3.
Yeah,
That's
H3. That is
that's
R3.
the pivot just above
M3,
R2.
M4, M5. M5, yeah.
Yeah, the H's and the L's just are symmetric with the traditional pivot point labeling.
Yeah.
I just don't know what the M label is for that, so I'm
But
just like,
it's H3 on your weird ones, yeah. It's M5 on the
for the
normal
H's
ones.
and the L's. I'm trying to standardize it back because the next update is going to extend the pivots to R5 and
Yeah.
S5. So once you get past those, the way we've been doing midpoint pivot labels doesn't really work, because then once you get to M, what you know how the very bottom middle pivot is M0. What do you go once you want to go below M0? M-1.
It's like,
well,
welcome,
actually, that's how it is.
welcome
That's
to
actually an
hell.
option in the next update to do M-1 if you really, really want just the layout to stay the same. I have I have like 5 different options for the midpoint pivot style if you want, but I've now set the default to the H's and the L's to standardize things. Because there's no standard format for it. Like no one's ever tried, literally. I was the person who wrote the section on Wikipedia for midpoint pivots. And that's true. I wrote it. Yeah, I wrote it. You can see if you check pivot points on Wikipedia. Anyway, the statistics for Euro Yen.
Yeah.
The most important statistic I got here for probabilities with the pivots. 0% of monthly closes are above that H3 pivot point.
Or are you in Wayne's or just on pivot points generally?
For traditional style pivot points, H3 on the monthly pivot.
Okay, yeah. My eyes is like, well, I can't.
Oh, also that tan chart on the Wikipedia page is my chart.
That one.
Yeah, man.
Where's Joe in the?
Well, I don't know. You don't promote any of your stuff, and I'm just sharing. I mean, in all seriousness, I wanted to also add a history section to that tab because I did a lot of research.
Yeah.
I was writing a book on pivot points, and
writing or reading.
Writing.
Oh, okay.
And I got a solid 3 pages of the history of the pivot point calculations and how the different varieties came to be, and who the individuals were that pivot points were derived from. And I want to add that. I'll just add that over into Wikipedia once I have all the sources at some point. And when I have extra time, I'm focused on development too much. So yeah, 0% of your monthly closes on Euro Yen are above the H3 pivot. 100% of your closes are below this H3 pivot. But 15% of your closes historically, including the current piece of data, the current close, 15% of your monthly closes are here between R2 and H3. 15, that's pretty darn high. Usually you don't see
that aggressive
anywhere,
market.
15, when you see 15, 20% of your closes for a month above R2 or below S2, you're talking about something like, hey, this month can have some shocker events in it every, once or twice a decade. And this month was one of those months.
Yeah.
Because the Bank of Japan just kept the money fountain on. But I would not expect. I mean, we're only in the first trading week of the month, and we're ending it now. So the expectation from here should be, if we go any higher, I would seriously be oogling, trying to figure out how to short this thing. But that's just the greed getting you trying to figure out how to short something. The plan needs to be obvious, and the catalyst needs to be clear. Right now, there is no catalyst, so I guess the guideline should be watch your squawk chat, right? Well, like Financial Juice or something. Watch your
Yeah,
economic
if they
calendar.
say something smart.
Yeah. Listen specifically for anything out of the Bank of Japan. I mean, this recent down move that we've had
Well, the
is
fence is
all,
recent.
it's like all based off of one little comment we got from someone at the Bank of Japan saying, hey, we might do some monetary tightening if headline inflation gets to 3 or 4%. That's what this little pullback is on, is maybe the inkling that they possibly could maybe sort of try to hike their rates in the future at some point.
Yeah. But also watch out for the finance minister. He's he's a yen buyer, but he can send things up again on yen because he's the one coming out and saying, well, yen is too low. Forex volatility is too much.
It is.
So,
for Japan, yeah, it is way too much for Japan.
They have lost their value tremendously quickly, more than anything else.
Yeah, but you know what? If, for example, euro yen above 145, I'm going to start like really kind of being on edge waiting for something. And, you know, a lot of people have been trying to short this thing on euro yen this month. I know a lot of pro traders because I read a lot of outlooks from a lot of different institutions. I'm talking about guys who have multi-million-dollar options and futures portfolios who have been trying to short this thing and have been getting stopped out on it. And they're like, we can't get it. We just can't get it. So if those guys can't get it, we sure as hell aren't. Unless you're doing some momentum strategy. So I'd say ideally wait for some momentum teetering off.
Yeah.
Pull up your MACD. I don't know.
Somewhere.
We could get this momentum rollover anytime over the next literally tomorrow could be when this momentum kills off, because tomorrow by expected value is the most bearish expected value trading day for euro yen in the month of June tomorrow. So I'd be on guard for a bearish move tomorrow seasonally, and we're already quite extended, but then it gets choppy. Quite literally, the damn thing could go sideways. It could be very frustrating, very, very frustrating to trade euro yen in the second, third week of this month. So this is just a warning, a heads up.
Seasonally, I'm just waiting for,
to be careful. To be careful with, especially trading the yen pairs, because it's all reliant on whatever word comes out of the Bank of Japan.
Any last hot topic, hot trading pair, or like the hottest thing you're looking at right now, like, or is everything just waiting, day trading, waiting things, or?
I just want to reiterate that dollar yuan chart, USD CNH or CH.
Yuan,
USD CNH. Look at it on a daily and be aware that when this thing goes up, China's not good, and when this thing goes down, China is good. And this is a lot easier to read than a bunch of news headlines. And this will directly affect your Aussie and your New Zealand dollar plays. So this is kind of like your heartbeat to watch. And so far, so good. It's constructive for the yuan. So this is something to kind of add to the watch list, because if the thing goes higher, it's not going to be constructive for Aussie. So this is something to just watch for risk assessment. If we're going to be risk on more, we go down on this chart. If we're going to be risk off more, we're going to go up on this chart.
Can't even spell risk. Okay, it's a child thing. Fine, I can't do better than what I did in 3rd grade, anyways. Very last thing to mention here is pound Aussie. I guess you're wanting to buy a secret box. The other one is also how do you say that?
This thing moved 100 pips out of nowhere.
Well, Aussie is really falling right now because dollar strength. So more anything else? Well, I guess tomorrow you can look for some kind of pullback on some kind of day trade, but right now is definitely just waiting for something small tomorrow, and right now is breaching too high. But I have no other than technical outlooks other than you need to have a pullback, and if this one just skyrockets, whatever. If you're thinking of shorting it, it is short was kind of like here until you start cracking down below this low again then. So right now I guess if you are a buyer, 175 is kind of a good place at the moment to start off but tomorrow. But right now it's let the volatility cool down and see where you end up by the end of tomorrow. Always coming back to resistance turning support is always a good place to be. So I just want to reiterate another time, people. There is a video I just posted 30 minutes ago. You can go watch that. Thank you guys for joining in today. Hope you have a fantastic day.
Absolutely.
Every single one of them. Yeah. Absolutely. Thank you very much. Other than that, ECB was great. There is some bullishness, there was some bearishness. Euro is chopping around, and I hope you didn't lose too much money. Euro is now stuck in a range.
I am glad I got out.
Probably not buying it tomorrow. Okay? Have a good day, people. Boom.
Boom.